Welcome to Clear Perspectives, a third quarter 2024 Marietta market update. I'm Mary Allmon, partner and portfolio manager at Marietta Investment Partners. In our last update, I highlighted the positive outlook for the U.S. equity markets and the U.S. economy. In this update, I'm reaffirming our positive outlook, and I think the U.S. economy is actually starting to settle into a soft landing. There are two major trends which support our outlook. First, inflation continues to decline. Annualized core PCE is ticking lower and will likely close out the year at about 2%. This gives the Federal Reserve plenty of room to introduce interest rate cuts. Second, the U.S. economy continues to expand. We're forecasting full-year GDP growth of around 2.5%, led by the consumer, a strong labor market, and real wage gains. A resilient U.S. consumer provides the foundation for future economic growth. So I think we need to acknowledge the pockets of weakness that I'm seeing in consumer spending. It's almost a tale of two consumers. One consumer is thriving with a fixed low interest rate mortgage and experiencing real wage gains, while the other consumer is restrained due to high rents, increased borrowing costs, and limited wage gains. Meanwhile, both consumers are feeling the cumulative impact of 4 years of inflation. Future growth will depend on and benefit from a reduction in inflation, which we're forecasting, and a cut in interest rates, which we're also forecasting. Easing borrowing costs will give consumers the needed relief and confidence to continue spending. The promise of a more stable economic future will also give CEOs confidence to increase capital expenditures and pursue growth activities like M&A. I think these trends are robust enough to increase corporate profits and will likely lead to further stock market advances this year. U.S. equities have had strong performance in 2024, and despite a little bit of increased volatility in the second quarter, including that 5% pullback, we're still seeing strong gains. There's a really interesting trend happening if we take a closer look and we peel back the first layer and look at some of the internal market dynamics. We're seeing concentrated gains in a very small number of companies. In particular, companies with exposure to technology or artificial intelligence. And I think the market is starting to transition into what we're calling it a prove it phase. I'm recommending companies that demonstrate tangible benefits and actually have demonstrated corporate profits. A broadening rally that includes more sectors would increase the prospect of a multi-year bull market. We're forecasting S&P 500 earnings of double digits for the full year, which I think justifies some of the higher PEs that I'm seeing. And I think markets will hold up as long as the estimates for corporate profits meet expectations. International markets are a little bit more of a mixed landscape. The Chinese recovery remains very fragile, and it has headwinds both from domestic economic challenges as well as global trade dynamics. But there's an interesting trend here in that international equities have not experienced the same outsized performance driven by just AI companies. So I think this discrepancy creates a really interesting entry point for value-focused investors. Further, key central banks are starting to ease and cut rates, so that should boost economic activity and sentiment. And then finally, we're seeing a little bit of outperformance in emerging markets versus developed markets. And historically, that has preceded a sustainable rally in international stocks. Thanks for spending a few minutes with me and with Marietta for the Clear Perspectives market update. We'd welcome your thoughts and love to hear your perspectives.